Let's head straight to the markets now. We have Anete to give us the details of what's playing out. So Anete, for most markets, they're having the Thanksgiving trade, even though U.S. markets are closed. Then tomorrow, we have the Black Friday trade, and I wonder what's going to happen next.
Well, Black Friday trade for the U.S. is expected to be a thin trade. So far for the U.S., we saw that ahead of the Thanksgiving holiday, which Wall Street is closed for that very spectacular holiday. U.S. always looks out for that holiday. We saw that trading on Wall Street was about a fifth lower than the normal typical day transaction would be.
Right.
And then, of course, at the same time, the stock U.S. Markets, they closed in the red yesterday. So, and they were all anticipating that the PCE would come in slightly higher, and then of course it was also in line with expectations. So for tomorrow, Friday's trading session, we expect that Wall Street
definitely looking forward to it.
It's going to be thin, but the close is what we do not know. But it will be a thin trading holiday. But let's talk about markets on the African continent. Always starting first with Nigeria's stock market, which has made some rebound. Yesterday we saw the market pull back by about 0.35%, and then also losing more than 208 billion naira. In contrast to what it gained on Tuesday, which was about a little above 8 billion naira. But we saw that market closing Wednesday in the red, but then making some pickups due to some bargain hunting on the exchange by some of the investors who are cherry picking on some stocks. We saw mixed trading yesterday on the market, and then at the same time we also saw that the volume of trades yesterday it had increased by about 45.8% to 805.1 million units. But at the moment, as we speak, we still see that that continuing activity is also oscillating, going back and forth. But of course, we look out for how that market closes at 2:30 Nigerian time. For the Johannesburg Stock Exchange All-Share Index, 0.63% is what it came at for intraday. While we saw that Johannesburg Stock Exchange 0.15% at intraday. 84,900 is trying to make its way back into the 85,000 level, which it had lost. So that market is still going back and forth and has been able to come all the way from 81,000, which it had dropped to at some point, and still trying to make that comeback. Now, for the other two markets that we're looking at, EGX 30 almost 0.30% down at intraday, and also just dropped below the 30,000 level, which it had hit, and at about 29,766.73. While for the Nairobi Stock Exchange, we saw the markets for the close of Wednesday's trading session, 0.3% for the close of Wednesday's trading session. Okay, so now let's take a look at that. Yesterday we were talking about the fixed income market, but this time we're looking at the equities market response to Tuesday's announcement of a further rate hike, which was from the last MPC meeting for 2024. We saw the interest rate hike at an all-time high, and that's one of the world's highest interest rate. That's for Nigeria, 27.5%. After that, 0.25%, or about 25 basis points interest rate hike. So now let's talk more about that, the impact, how it's having on the local bourse, and we have Orelua Odetunde, research analyst with Ancora Asset Management, to tell us more about this. Thank you for joining us, Orelua.
Yeah, thank you for having me. Good afternoon.
Okay. So now I know that the banking sector is always the most sensitive to interest rate hike, but tell us more about this impact. Which sectors were also affected by the interest rate hike, and why?
Yeah, thank you for that. I think it's important to first look at the pace of tightening that we've seen this year, and the last increase that we saw on Tuesday, like you earlier mentioned. So if you look at it, the pace of tightening has actually slowed. I mean, I think all through the year we saw a 4% hike, a 2% hike, but on Tuesday we saw a 0.25% hike. So I think it just goes to show that, the aggressive tightening cycle that we've seen has started to slow, and that, some of the comments made by the central bank governor of a return back to orthodox policies. I think we saw the fixed income markets, prior prior to the time we saw that hike happen, we saw that at the Treasury bill auction, private market auction, and the bond auction, we also saw that, marginal rates actually increased in the bonds market by, about a record number to 22%. Then we also looked at the Treasury bill private market auction, where there was a 50 basis point increase in the 1-year Treasury bill instrument. So I think that hike was just done to complement that increase that we saw in Treasury bill and bond auction yields. So not necessarily that it was trying to, maybe signal for that tightening. And, going forward, we kind of expect that, 2025, we might start to see a pause or a moderation in yields. But I mean, if you now take a look back at the equity market, I think reaction was largely muted. I think what we saw was, a bit of positive reaction for the financial services sector, particularly the banks, as well as the insurance sector. More on the insurance sector, actually. A lot of them have, significant exposures to fixed income instruments, and where yields are priced, it improves profitability for these firms. If you also look at the banks as well, we didn't see so much reactions also, but slightly positive. I think on the negative side was when on the flip side was when we looked at the consumer goods sector and the industrial goods sector. It was also largely muted, but we did see, a bit of sell-offs on, big or mid-cap stocks like Nigerian breweries, which is a brewery player. I think the stock was down about 6%, and on a year-to-date basis, I think the stock has been down close to 20%. And I think it just goes to show, the fact that, these kind of companies will continue to incur higher finance costs, which will continue to affect their profitability, and at the same time affect the ability to maintain a dividend-paying culture in 2025. So I think we saw reactions to, negative reactions to the consumer goods and industrial goods sector, but a bit positive to the financial services sector.
Quite interesting. Okay, so now you've talked much about the fixed income market. So my next question is, has there been a shift of investors within the equities market into the fixed income securities?
So I'll say not really. If you take a look at where inflation was at the last print, I think it was close to about 34%. And then you look at where bond yields are at, an average of around 19 to 20%. Then you also look at treasury bills on an average of around 24 to 25%. You'll still see that there's a negative real return gap for investors. And given the very high inflationary environment that we faced in 2024, investors definitely need to invest in instruments that can earn higher than where inflation is currently at. So we're seeing investors starting to increase their risk appetite and play more in the equity market. On a year-to-date basis, the market is up about 30%, and in some significant stocks we've seen over 100 or 200% capital appreciation in them. So look at it vis-a-vis inflationary pressures. You still see that the equity market still is a good play for a lot of investors. So I don't think we're seeing that shift. And if you also look at the foreign portfolio investors report that we saw released by the HGX, you'd also see that 90% of the volume of transactions is being controlled by domestic investors. So we're still seeing a play by a lot of investors in the equity market.
Quite interesting. So I think, Aurelua, so we'll leave it there and then look out for how the last two trading sessions of November would end. Well, starting with today, just a couple of, about less than an hour from now, and then look out for how Friday would also end for the market. Thank you so much for your time on our show.
Thank you for having me.
That was Aurelua Odetunde, research analyst at Ankoria Asset Management, giving us details about the fixed income, the equities market response to the interest rate hike. Okay, so from Africa, we move to the Middle East as usual, which is always our next stop point. Tadawul. Okay, now let's talk about the Tadawul first. Tadawul was up by 0.38%. That's for the Saudi Arabia stock market, while the Qatari Stock Exchange was up by 0.54%. If we could talk about the United Arab Emirates markets, where we have the Dubai. Okay, so all the markets were in the green except for the Abu Dhabi index, which was down by 0.16% at intraday, while the Dubai was up by more than half of 1% at intraday. This market like I always used to mention, this market numbers normally would change, so we'll look out for how they will close for Thursday, which is when the time when most of the Middle East markets would close for the week. And then we make our next stop to what we were mentioning earlier, United States markets. Markets on Wall Street, they're closed for Thursday, but this is the close for Wednesday's trading session, where we see market futures, they were in the red actually, but this is what the numbers turned out. We also saw that for the market, speaking about the market, we saw the personal consumption expenditures price index, or what you call the PCE, which is a gauge, the primary gauge used by the US Fed to gauge inflation. And of course, the next week, the US will be holding its final rate decision meeting, which they expected to cut the interest rate further by about 0.25%. But for the close of Wednesday, we saw that the market was all in the green, 0.08% for the Nasdaq, for the Dow Jones Industrial Average, S&P 500 0.14%, and the Nasdaq futures 0.23%. This was as the tech giant Nvidia had released. It came out with some it lost more than 1%. As well, we also saw earnings reports from Dell and HP and some other tech giants, which also dented some of the market performance for the close of Wednesday's trading session. But for tomorrow, the market will reopen for a holiday-themed trading, and the market will be looking out for Cyber Monday, which is coming up next week. And finally, we make our final stop for the Asian markets, where we see the market, for the South Korea, we saw that South Korea's central bank had cut the interest rate further by 0.25%. So the market closed in the green. Nikkei 225 also in the green, 0.56%. The Hang Seng for Hong Kong was down by 1.20%. For the other two markets, Shanghai and the Nifty 50 were also in the red for the close of Thursday's trading session. So, Ladi, that's the close for the markets.
Yeah, so definitely all eyes on the Black Friday sale. How's it going to look? Is it going to be sell-offs or maybe buy interest? We'll definitely find out. Thank you so much.
Ladi, I think you should have a crystal ball too.
Crystal ball.
Yes.
All right, I'll get that out at some point. Thank you so much, Anita, there for giving us most of those details now.